Ladies and gentlemen, it's my pleasure to speak at Hong Kong FinTech Week again. Earlier today, our CEO, Mr. Ashley Elder, mentioned the government's proposal to regulate virtual asset exchanges that trade non-security tokens in Hong Kong. I will now further unveil the details of this proposal. Let's rewind a bit and start from the regulatory framework for virtual asset trading platforms that we announced last year. Under the framework, platforms trading security tokens or a mixture of security and non-security tokens can apply for SFC license. Since the announcement, interested parties came and talked to us. Some of them have applied for our license and recognize the importance of investor protection. They are willing to comply with our high regulatory standards. We are very delighted to see such a development. However, as the regime is created under the Securities and Futures Ordinance, it's only for platforms trading security tokens or a mixture of securities and non-securities tokens. Coming back to the government's proposal, the crux of it is to widen the supervisory net over centralized virtual asset trading platforms, so that Hong Kong could comply with the requirements of FATF, the Financial Action Task Force, which is the global AML watchdog. FATF requires member jurisdictions to regulate and supervise virtual asset service providers for AML purpose. As a FATF member, Hong Kong therefore is under an obligation to comply with the standards. As such, the Hong Kong government will issue a consultation paper to further regulate centralized virtual asset trading platforms in Hong Kong. The government will consult on creating a proposed regime which covers centralized automated platforms that trade non-security tokens only, for example, just Bitcoin and Ethers. Under the proposal, as you will see shortly, the SFC will be empowered to license and supervise centralized trading platforms that trade non-security tokens. The licensing and conduct requirements of these platforms will be very similar to the existing regime. For example, at the initial stage, the licensed platform should only offer services to professional investors. We expect them to properly segregate client assets from their own assets. They should ensure the keys of the wallets are properly managed. They should also have in place measures to deal with possible market manipulation activities on their platforms. If serious breaches are committed, there will be intervention and restrictions on their business. You can find all these details in the government's consultation paper later today. In future, the government's proposed regime and the existing regime will work in parallel. This means that virtual asset platforms that trade only non-security tokens should be under the proposed regime. Those that trade security tokens or a mixture of a security and non-security tokens should continue to be regulated under the existing regime. They are not required to apply for a new license. As the proposed regime will be under consultation, even if it's agreed upon, the proposal will still need to go through the legislative process. This may take some time. We believe the Hong Kong government's proposal will be beneficial to the virtual asset ecosystem in Hong Kong. Thank you very much for having me here today. Please enjoy the rest of the FinTech Week.